Good morning. Welcome to Trading Hour. I'm Reema Tendulkar with Mia Pavitra Parekh and Mangalam Malu. We made it to Friday, right?
We did.
Mangalam looks like it.
I'm always looking like Friday.
And you're always feeling like Friday as well.
I always feel like Friday, yeah. So that also means that Fridays you don't feel as good because you're feeling equally
happy on all days, right? That's your state of being.
Yeah.
But we're, of course, extra excited that Friday is finally here. But for our markets per se, it's a bit of, a bit of profit booking that you are seeing. We've had 8 days of gains on the trot. The Nifty in the last 8 days has seen a rally down from 18,160. We rallied close to about 650 points till yesterday. That's an up move of 3.5%. The mid-cap index in the last 8 days rallied close to about 4.5%. So some amount of profit booking, and plus Asia this morning is weak. It's the Japanese markets where you are seeing the biggest cut. That's down close to about 1.8%. But across the rest of the Asian markets too, you are seeing some red.
Yes, and over the last few days, I was constantly listening to you. You said it's 5 days of gains, 6 days of gains, 7 days of gains, and 8th day is when you actually see the Nifty lower. Yeah. So thank you for reminding us of that streak. And as we speak right now, 18,700 is an important level to watch out for, primarily because there was a lot of put writing at 18,800 and 18,850 thereabouts in yesterday's trading session for next week. So if the market has to bounce back, it will be 18,650 to 18,700 levels. So to that extent, we are at important support zones. And the other thing that's heartening is the way mid-caps are outperforming. Usually mid-caps outperform when, the street believes that the rates on the frontline indices are protected and the downside out there is protected. And just look at the stocks that are buzzing around. Look at Raymond. It's up 11% with huge volumes. We have something like a Varun Beverages, and seasonally there's not even a strong quarter for Varun Beverages because not a lot of people have cold drinks, etc. But that stock is up around 5-odd%. Hindware Homes, again, third quarter not particularly good for all these home improvement companies, but up around 5.5%, 8.5% now as we speak on Hindware Home as well, with a lot of volume action.
So there are definitely a lot of stocks which are moving around, even though the market is seeing a little bit of a cut for this entire week. If you look at it, it has been a lot of the commodity plays which have done well. So a lot of the oil-focused companies, you have the metals pack which has done well. The index itself is up around 3.7% for the metal index. That's how it's fared this week. The real estate pack has been good as well. On the downside today, of course, all of the auto sales are in focus. So you're seeing some cuts come through there. And while today is a little bit quiet, there's a lot that we'll be reacting to on Monday. You have the US jobs data, which comes through tonight. So that's an important global cue to watch out for. Brent has moved back to around 87. And you do have the OPEC meet on the 4th of December. That is on Sunday. So we'll watch out for that. And of course, we'll react to that on Monday as well. So lots for us to track in terms of cues as well for this weekend. But let's kickstart the show now, and we will talk about some stocks which are really moving around in trade. And let's start actually with 2 stocks which are reacting to positive management commentary. First up, we're going to focus on Westlife Foodworld strategy for 2027, which the management unveiled yesterday. Mangalam, take us through some of the highlights.
Well, the biggest highlight is that it means a lot more burgers and fries for all of us. They are targeting revenues of 4,000 to 4,500 odd crores by FY27. What did they do in FY22? They did around 1,500 odd crores in terms of revenue. So that's a big jump in the company's revenues. Margins also will be higher. How will the margins be higher? Because they will control costs. They will sell higher margin products. 18 to 20% comes in from there. And at the same time, they will also see high single-digit same-store sales growth. Same-store sales growth is extremely important for all these guys, primarily because the more you sell from the same store, the costs are fixed, so that is margin accretive. So that is an important one. What also stands out is that the pace of opening stores is going to increase for them. They're targeting over 600 stores from 337 right now. So the next couple of years, we will see 45 to 55 stores being added every year, as against the 25 to 35 that they have been doing earlier itself. And more of these stores would also have more of their offerings, the kinds of McCafe, etc. So they expect 100% of their stores to have McCafes, as against 80% right now. Why is that? Because McCafes in the same store, you have to spend only 1 crore in terms of additional capex, but it gives you more sales and it gives you better margins, because the coffee cost will be the same, but a coffee price, you guys order regularly, so you all would know how expensive coffee can be. So that means better margins for them. Expect 15 to 18% revenue coming in from McCafe, as against 12% right now.
I was just checking, Westlife Foodworld has not seen margins above 18%, right? The last time its margins were above 18% was in March of 2011. That means, FY11, FY12.
And those were pre-Ind AS. So
Exactly, and plus the size would have been so much smaller, where you can, possibly generate higher profitability. But this is amazing, right? 18 to 20% compared to its historical levels on that scale of 4,000-5,000 crore of a top line.
This is amazing, and what really stands out is not just the margins, the way they're looking at their products. So where do the next bunch of stores come in? They come in at tier 2, tier 3 cities. They come in the south part of the southern part of the country. They have franchise for west and south. South, they see further growth opportunities there, and tier 2, tier 3 cities is where the growth rates are much higher. And in the southern part itself, what is the product that will do the best? It's the chicken sandwich.
Okay.
Because you've seen KFC do that. Globally as well, chicken as a vertical is doing extremely well, and which is why Jubilant FoodWorks also bought Popeye. So McDonald's wants to focus on that aspect, which does in the southern part, grow their stores there, and
so they have a lesser presence in South right now?
They have a lesser presence in South as against the West. West is 55-45. They want to make it equal at least going forward.
Interesting, right? He started off saying that this means more burgers for us, but it's not that Westlife is giving us burgers. If it has to come from you, Mangalam.
I can buy you fries and, okay, burgers for you all as well. I don't think you all will
Burgers and coffee is good.
Burgers and coffee as well? You want a smoothie too?
I'll just send you my list, okay?
All right.
After this